Hey guys, so today is Wednesday. We had a CPI at 8:30 today. Today was a really interesting trading day. I traded a lot today. Definitely also overtraded today, I have to admit. But yeah, I really kept actually a clear head and was able basically to take really nice scalps actually today. Also ended up in the green. Today was actually not a really huge or wide range on the daily chart, but we definitely were volatile. We were able to move, and we were also trading very algorithmic, even if it doesn't look on the first look like it. Definitely overtraded in here is also with approaching London close macro, but there are some really pretty nice trades as well today. I've marked out basically which I want to talk about, which have basically the most important approach behind it, and therefore will just remove my execution marks. Maybe I will take them on again, but for now I want to basically just break down today's trading conditions, and then I want to go over my trade executions and how I ended up in the green and what I could have done better. So let's start with the daily chart. As always, as you know, yeah, we're really stuck in the range, and it's pretty interesting because today, for example, we have a inside trading day, so we did not reach the daily buy sell liquidity or daily sell liquidity, which I was both looking for, that we could reach. So there's definitely no buys today. So just relying on the daily chart in here, you cannot tell if we are bullish or bearish. You just can't. Yeah, still expecting that we eventually will break out of this range, or definitely hoping that we will break out of this range, because yeah, really a tight range where we are trading in. But let's drop to a hourly chart. What we can see right here is, so still we have the huge new opening, not new opening range gap, but new weak opening gap, traded lower, so sold off and traded higher. So that's basically a balanced price range down here. Yeah, definitely V-shaped, so really clean. And then we have a one-sided delivery through the high time frame gaps, the only upside delivery. Eventually, I want to see that we trade back into the high time frame gap with down close candles in order to balance the prices in here. We came up, swept also hourly buy sell liquidity with the high right here, trade higher, and from there on also now are in a basically hourly range. So we did not, as I mentioned before, reach the daily buy sell liquidity, and also did not reach the daily sell liquidity we've down here. So also trading within a hourly range. What we also can see is we have a relatively important balanced price range on the hourly chart as well. So as you can see, a busy, which followed with a CB, so, and also with a short period of time in between, so definitely a balanced price range. Disrespected it right here, but traded lower anyways, and then really respected it well on the hourly chart right here. As you can see, the candles are closing perfectly at the upper quadrant. That's what we want to see if we are bearish. Also created a SMT in here. I think with that we can drop to a 50-minute chart, but before I do that, yeah, still expecting actually lower prices. So well, eventually if we trade higher, I want to see that we trade higher and eventually come to the trade back to the high time frame gap right here, to clear out the highs. Definitely also a kind of balanced price range in here, but yeah, eventually I wanted to see that we either sweep daily buy sell liquidity or daily sell liquidity. We failed to do that, but yeah, really also looking forward that we will eventually just dump through the high time frame gaps in here and just attack the daily sell liquidity, that we can break out of the daily chart. But with that, now we can drop to a 50-minute chart, and right here you can see the different sessions. So what we have right here is basically nothing really special. We scrapped London highs and lows, and created a really huge SMT with VS with yesterday's AM lows, and from there on basically trade higher. So CPI actually did not really had a huge impact, and we came up, scrapped London highs within our New York open kill zone. So therefore we have buy sell liquidity right here, and yeah, basically since the opening we traded higher and trade also way above the midnight opening price, and from there it just sold off, and now we are consolidating. Before we drop now lower to the 1 minute chart, I want to show you, as always, regular trading hours, because that's really important for my approach. So today was actually quite interesting because we I think did not really had any we did not have any opening range gap, so that's quite interesting. But what I was looking at is the buy sell liquidity right here, so therefore expected actually that we would eventually even kind of be bearish, because we have the really clean 50-minute CB in that case, combined, that's my fault, combined with the buy sell liquidity right here. We came up into that, scrapped that, and from there traded lower. And now I'm really expecting that we will eventually even trade lower and just revisit the new opening range gap down here from Monday, which is also combined with the high time frame gap on regular electronic trading hours. So also the clean liquidity down here, which we also scrapped at around 12. So but I think that's basically it. So nothing really special today, I have to admit. What I also kind of really like, actually what I forgot to mention, is the fact that we have basically a equal highs right here. So we do have a SMT being in play, yes, but it's a bit too equal, it's a bit too clean. So I could also expect that we trade higher from here. That's what basically was also combined with my bullish bias, because we also had on regular trading hours equal highs on the hourly chart, which we could have eventually swept today, but also a clean respection of the 50-minute fair gap combined with the buy sell liquidity sweep, and eventually the target down here with the new opening range gap from Monday. So today really a 2 buys day, but actually ended up being a inside day on the daily chart. Still we had quite good volatility. So now back to NQ on ES. I will talk about it later. So no, that was actually wrong. So right here we can see the electronic trading hours and the 1 minute chart, and now I want to go over the trades I labeled out right here, so marked out. So basically what we got is that we traded high with the opening, we swept New York open kill zone buy sell liquidity and traded higher, and what we left is basically still New York open kill zone sell side liquidity, and also, as I now basically mentioned before, daily sell liquidity as well, also the sell liquidity down here, and also the approach on regular trading hours that we will eventually trade back to Monday's new opening range gap. That's my bearish bias, that's what I wanted to see. Also relatively equal lows down here, and also our daily higher time frame gap, which is today's new day opening gap. So really important. If we have a new day opening gap which is barely traded to, it's really has a more important or a more meaningful impact on price. That's what we can see basically right here. But yeah, let's go over the first trade. So what I wanted to see is basically actually higher prices, but because we had really high resistance in here trading higher, I did not really like the opportunity. And also what we had in play right here was, as you see with the highs right here as well, SMT with London highs. So that was also the case with the high right here, obviously. And therefore we had not only session SMT, but also a lower time frame SMT. And I like the displacement within our basically approaching 943. So that's the minimum time limit for us being able to trade, because we want to trade within the 10 AM macro. So I wanted to see a nice reaction. Eventually, if you would have displaced through the fair gap right here, I would have even gone long in that case. Because why? Because I had basically the condition with the 5-minute chart. We came down, traded into the 5-minute gap right here. That's what we want to see. If we respect that, we are able to go long. If not, we want to go short. And therefore we have to depend basically also on the yeah, 1 minute chart. In that case, we would also SMT being in play right here, so with the lows. But yeah, I wanted to see that we eventually disrespect the fair gap, or we respect it and trade lower. That's what we did. We respected it. I entered, went short, and yeah, could have. I think that was wrong. I aimed basically for obviously our 8:30 opening price, but also for yeah, much lower targets. Eventually even sells liquidity down here, but I just leave it like that. So yeah, I got stopped break even in here. Got a really aggressive movement higher, and then I was already convinced, okay, we are now respecting basically the 5 minute fair value gap you can see right here. So definitely the case. And therefore we are, or I want to see that we trade higher. Why? Because we have basically daily buy sell liquidity in here, also barely traded above the midnight opening price, and also in the fact that we have equal hourly highs on regular trading hours, as I showed you before. That's my bullish buy. So I actually, as you can see, the really small trade in here went long already right here. And where did I put my stop? I put my stop so we had the fair gap right here, as you see, and I put it below, basically, I think, I don't even know where I put it, but if I put back on the execution marks, I got really heavily stopped today, so I think I don't really know. Yeah, that's it. So that's what I was looking at. So I wanted to have my stop below the lower quadrant, and I got stopped, as you can see right here, at the lowest handle, lowest tick of the low. It looks unfortunate, but it's just poor, I don't know, it's really poor stop loss management. So I just should have kept it below the balanced price range. I was not really aware of the fact that we had a balanced price range. I kind of was only looking at the fair gap right here, but definitely we have to yeah, take a look at the balanced price range. So the also inversion fair gap, because only or definitely want to see that we respect the fair gap. Yes, if we want to trade higher, but we also respect the fair gap right here, but also trade lower with the wicks, because the bodies tell the stories, the wicks do the damage. Therefore, we trade lower with the wicks, getting stopped, and then trade higher. But yeah, definitely really poor stop loss management, I have to admit. But realize that re-entered right here really low, and then we got aggressive movement higher. So that was really clean, and I took my first partial right here, just with the expansion of the volatility right here, and expected actually that we would eventually see a short-term retracement and then trade back to the daily buy sell liquidity, but we failed to do that. I got stopped right here and was out of the trade, and with that I was up 140 for the day, and I could have just ended trading, definitely. And actually, it's one of my rules that I stop trading if I'm basically when I made money on the day. Pardon. But I still today kept on trading because I knew that today was a really good volatile trading day. And also I did not met already my money objective for the week. And also because the price movement right here was such a quick and rapid rally higher that I knew the masses did not participate in anything in here. So we did not really had the chance to have a tradable setup so far. So I think to catch this this long higher, only really few traders did that, because it's also a bit aggressive, I have to admit, to go long in here, because we are definitely not in the best position, because we are really far away from our market maker buy model, which is in play down here. And if you take your quadrants basically, and you want to see that basically that's your objective, so the daily buy sell liquidity, and that's your draw for price, so from A to B, and you can see that I eventually was even entering below CE. That's why it's still a valid trade, but it looks a bit aggressive because we already scrapped also both sessions by liquidity, so we do not really have any clear or clean targets to look for. Still, yeah, that's basically my reason why I kept on trading, because I really knew if we are either going to trade up to this high, or we will eventually start a really strong market maker sell model down to the lows down here. Eventually not a New York open kill zone says liquidity, because it's a protected low through the SMT being in play. So therefore expected more that we would eventually trade back to the just original consolidation, maybe something like that in here, I don't know. Also respected right here, something like that. So that's why I kept on trading. Definitely it's over traded, obviously. I could have stopped trading in here, but I'm content with the decision actually. So it's more what I could have done better. So I went long already in here and got stopped. Went long again once here and got stopped. That's, to me, it looks like risking too much, but it's only one contract and it's a really tight stop. And if we are trading higher from here, the stop is enough. In that case, I knew now, okay, we are definitely not bullish. We are basically in a market maker sell mode. We are expecting the inversion HTF Gab right here, first used as support and now basically used as resistance. We are unable to trade higher. So therefore I knew, okay, we are now in a market maker sell model, and that we definitely will leave the daily buy sell liquidity intact, and that's basically our high for today. And also because we have such strong SMTs in play, it's also really convincing that we could go now lower. I entered right here a bit too late, I have to admit, but yeah, really volatile. As I explained before, I kept my stop above here. That should have been enough if we are bearish, or actually was. But as I told you before, new day opening gaps are really aggressive if we barely trade into them. Also with trading only into the 830 opening price, you could have also taken just a partial here already, but I'm only trading one contract, so it's a bit more difficult for me. I was definitely looking for the equal lows down here, so I got stopped break even. No, I got stopped break even, that's the right arrow. Then I re-entered right here because I'm convinced that we will go lower. Also the fact that we once again take a look on the 5-minute chart, only traded into the 5-minute gap right here with the wick. That's a institutional order flow entry trade, not really, but kind of. And from there, we just sold off, and that's the mistake I'm most annoyed of today. I was trading one contract. I was aiming for a bit more money, sorry. I was break even, so I'm still up 140 in here, and just should have aimed for the low hanging fruit. I know that we definitely will take out the equal lows. I don't know if we will reach lower, but I definitely know that we will take out the equal sales liquidity. So why don't I sorry, I can't talk right now, but why don't I just close my position there? I don't know. I was too greedy. Trading only one contract is really stressful, also because we only wicked into it. It's a bit more difficult, and already instantly traded away from it. But yeah, just definitely a lesson I learned today, a wrong approach. And now in here, that's, of course, that's over trading. But we had SMT being in play. I wanted to see that we will reach lower. I was convinced that we will reach lower. Why? Because we cannot only rely on MQ, but if we take a look on ES, we can see that we did not take out the equal lows right here. So to leave something like that intact is criminal. So that's why I was convinced that we will eventually reach for them. We had the SMT being in plane here. I showed you before, and I want you to see that we resweep them basically, and also look open kill zone says liquidity down here. Eventually, I don't know, SMT was in play on the NQ, but definitely such equal lows cannot stay intact. I know today's trading breakdown takes a while, but definitely some really important lessons I learned today. So yeah, definitely over trading in here, went short, went long, went short, went long. London close macro seeks opposing liquidity, which is in that case definitely buys a liquidity. Therefore, I also tended to go long in here. I was long in here. Also could have only aimed for the fair gap, 46 handles. That's just enough actually. Almost, I think, yeah, 50 handles. Could have been already a trade, but yeah, that's, I'm not really scalping in that case. My minimum target would have been CE right here of the higher time frame gap, or eventually buys the liquidity right here, but we failed to do that. And then I realized, okay, we have such high resistance, retracement higher, and not only that, but also on the 50-minute chart, you can see that we only wicked lower. So that's also why this liquidity pool is so important, because as you see, we are trading also into the expansion block down here with sweeping the 50-minute sells the liquidity, not buys the liquidity, sells the liquidity, sorry. But we have, yeah, only wicks in here, so that's still inefficient. I want to see that we close with bodies in here, so that's why I'm still looking for lower prices. And also, if we take a look on the hourly chart, even more important, yeah, today is definitely a QR code on the hourly chart because we are stuck in this tight range. But which we have to look at is the wick right here. So the candle, I don't know if you see it, right here, 10 a.m. So huge wick to the upside, but we don't expect that we will revisit the highs because S&T is in play, and we definitely fail to trade higher. So that's what we are really aware of. And now we have the huge wick to the downside. I'm going to see, as you can see right here, huge wick to the upside, body followed. Huge wick to the downside, body followed. So that's really most of the time the case. So as you can see, huge wick to the upside, body followed. It's, yeah, really most of the time the case. Huge wick to the upside, body followed. So that's what we don't want you to trade against, basically. We don't want to trade against the hourly chart. And that's why the retracement within the London close macro higher has high resistance, because we are trading against the hourly chart. And that's why the setup going short in here has such an aggressive movement to the downside. It's not just poor luck. It's not the case that we would have seen something to the upside right here as well. No, that's not the case, because we're trading against the hourly chart. That's only able today for shorts in here. Here, that's definitely the case. Why? Because the hourly was bullish. Therefore, we can expect a low resistance liquidity run. Right here, the hourly is bearish. Therefore, we see a low resistance liquidity run to the downside. A bit kind of difficult trading in here as well, because yeah, I went long, as I told you before, also in here, added in here as well, got stopped, almost break even, went short, got stopped. This movement right here, this candle movement, to me is a bit suspicious. I don't know why, but it's a bit too aggressive. We closed below the 930 opening, below the inversion fair gap, below the balance price range, really clean displacement lower within our London close macro after 11, and still we got such an aggressive movement higher, displacement higher. I don't really like that, I have to admit. Still, I was aware of the fact that yeah, we are definitely bearish. Still took just, I think I took a long in here, but we ignore that. Yeah, mentioned before, I definitely confused me a bit, the aggressive displacement higher, but really aware of the fact that we respected the fair gap, that we are definitely still looking yeah, more leading to the bearish side, and therefore I entered right here short after we traded below the order block. Yeah, put my stop above the order block, and from there on we had such a clean aggressive rally to the downside. That's what I wanted to see. Took my first partial right here, was aiming for a bit lower prices. I think, yeah, I showed you before something like I called original consolidation. It's like for a market maker buy model, which we want basically to beat. We did that, but yeah, I kept my stop really tight and got stopped right here. I'm content with that. I could have just also closed at the busy, but yeah, with such a volatility, I don't want to close basically too early. I like to trail my stop a bit too. I like to trail my stop tight and eventually give the trade the chance that we will just dump to the downside to the SSL liquidity. Definitely today more difficult, yes. Eventually we met even external SSL liquidity, so with that we completed our market maker sell model. That's clean to see. But yeah, I think that's basically it. So already talked a lot, but yeah, many clean trades in here. But what I definitely learned today, so I like the short right here. I think it's definitely valid. With trading 2 contracts, I already could have taken a partial in here. We've gotten it a bit more difficult. Still, I like the fact that I mentioned yesterday that I want to trade the first trade with only 1 contract because I tend to be offside for the first few trades. Actually, I'm tending to trade a bit more than, so I'm not only like trading 1 trade and off. That's not really me, because have actually, yeah, quite a lot experience and also intuition, because I'm actually looking at these charts already. I think for at least 2 years, ICT only. So definitely a while into those charts, and I know sometimes that we will draw to something. I'm just not really able to have the right money management, for example. So that's why I keep on trading, and sometimes it's definitely really going on to my mental capital, but most of the time I'm right about my narrative. What I definitely could have avoided is the loss right here, so I need better stop management in that case. That was really poor management, I have to admit. I really like the long in here. I really like the partial. I'm content with the stop. I don't like the trades in here because I'm trading basically when I have no clear bias being in play. I like the short because now we are definitely in a market maker sell model. I am content with getting stop break even. I'm really like the re-entry and completely content with that. The stop right here, I'm content. Yeah, already mentioned that I like the re-entry. What I really don't like is the fact that I missed on the opportunity to just be out of the trade right here and be done with trading for today. That's what definitely annoys me today. What I don't like is how many trades I took in here, because we should have known that we need to wait for 11, and we should have known that trading against the hourly chart in that case is not ideal, and that we will not see any aggressive movements higher, and that we will not participate in a low resistance liquidity run. I'm content with the short right here and also with the stop, and I do like, really do like the last short in here with the London close macro. I like my first partial, and I'm really content with trailing my stop aggressive. So overall, really definitely 3 or 4 quality trades I took today. Also, I think 5 or 6, I don't know, trades which I just could have avoided. But yeah, I'm also learning still much. And I think that's basically it. So yeah, also I'm always looking at, yes, I'm not really mentioning it much. Sorry, I'm not mentioning yes much in my trade breakdowns, because in the afterwards it's not really easy to retell basically what I was thinking there. But I'm always looking at ES. If we take the targets first on ES, how we are trading at some levels. Did we already sweep the equal lows I showed you before? Did we not? How are we basically respecting some PD arrays? I'm always looking at ES on my second monitor. It's really important to look at ES, really important. Do we form any SMTs? Also definitely all the time I'm looking at the 5-minute chart, at the hourly chart, at even more importantly, maybe not more importantly than the hourly chart, but also regular trading hours. Do we respect any quadrants levels? So it's not only the minute chart. I'm definitely over trading on the lower time frame, so I'm a bit too focused, I have a too narrow vision only on the lower time frame setup. So I'm still a bit too much of a setup trader, pattern trader, how we like to call it. But yeah, I really try to combine it basically with the higher time frame, with the regular trading hours. I'm definitely improving. I still have to do that a bit more in order to filter which trades I want to take, which are the best setups, which are the most reliable, and yeah, setups which will basically play out, and which ones do we want to avoid at all, basically, and also which trading conditions we want to avoid at all. But yeah, definitely a big learning today. I will journal also, yeah, what I learned today. And yeah, I think that's basically it. I don't know how I will trade, or if I'm even able to trade for the rest for the week. Now I'm content with my profit on the week, so I'm also content with not trading. Tomorrow I definitely don't have the time to look at the charts with the opening. So and Friday I'm probably not at home. So I think that's basically it for this week. But yeah, I hope you learned something new. I know today was a bit yeah, a longer trade breakdown, but yeah, it's really important to me to just only to yeah, talk through it. I'm learning by doing. So see you soon and safe trading.